This is Dan Max at eXp Realty, aka the Trading Agent. This is your live market chat for Wednesday, the FOMC day, 11:30 Eastern Standard Time, January 31st. Hopefully you're doing well. Wow, are we surprised by today's action and gap down? I would say on a scale of 1 to 10, for me personally, no. For most, probably yes. Again, as we talk about traps and how they evolve and you trade long enough, you're never really surprised by anything. Now, don't get too comfortable yet because we haven't seen the Fed meeting. We haven't heard them speak directly. But there's a lot of complicated things coming up, right? They have to decide what to do. And what they say will affect the markets. And we also know that they'll say one thing and change their mind in 3 days, 3 minutes, whatever. So, as I've said over and over and over and over, they are not navigating. They've never navigated a soft landing by when they've raised rates this aggressively. Never, not once. What they're doing is going to have longer term effects. So how do we move forward? What do we expect? Again, UPS announcing the manufacturing data falling off a cliff. I mean, UPS laying off people literally as they just gave them bonuses. Like, this recession that's coming is going to be bigger and deeper. Now, can they throw liquidity at it to stem it? We'll see. It is an election year. We will see what happens. Again, if you want to argue that we're going higher in time, I don't think anyone would argue that. What's that time frame, though? Will there be a 20% pullback? Will there be a pullback? Will we go into recession and the market price in? That's the biggest question. And at this point, it's all risk reward and it's probabilities. Do you want to stay strong? Sorry, not strong. Stay long and have profits taken, or do you want to trade around it? Maybe shorting, if that's your preference. Either way, be careful. Be careful out there. Again, people who are just riding, say the NVIDIA or the AMDs or the semis up forever, good luck. Good luck. Hey, Eric, yeah, exactly. Tomorrow or today, be careful. We don't know. I mean, they might say something, the market react one way and then flip. If you've traded FOMC days, you know they're extremely volatile. All right, so if you're new to the channel, check out the Discord room. A link is in the description below. I'll put it in the actual chat. Please, if you join the room, please get involved. Don't be silly. Like, again, if you want to learn, ask questions. No ego. And if you just stick around and don't say anything, I will guarantee you will be kicked out of the server within a few days. Because, again, how do we know you're not a troll? I mean, not a troll, more like just a bot going to rip me off my likeness. Again, how many times, again, it's hilarious. Literally, daily, someone is messaging people from behind the scenes, copying my information and asking people for help or Bitcoin or some other crap. Because, again, you can come right in, join, copy my background, be a goofball if you really want to. And so that's what my job is, to try to protect the people involved by deleting folks who are not involved. Because the odds that if you're not involved, there's a reason why. You're either trying to take advantage of other people in the room or have some sort of, I don't know, just you don't want to learn. Like, if you want to learn, ask questions. I mean, no ego. No ego. So, also, check out, let me get my Calendly link out. I don't know why. Oh, here it is. If you ever want to chat, I offer this all the time. Again, here's the link. Hit me up. See my schedule. I try to update it. If you have questions. Okay, Jay, you're not missing anything, buddy. But again, I ask people, get involved. Be willing to learn. Take risk, meaning going against your own comfort zones. Can you go into a trade, define your risk? Can you do something different than you've always done and expect maybe different results? That's part of trading, pivoting, acknowledging your weaknesses. It's a probability game. No one knows anything for certain. So if you want to troll and talk junk or celebrate, and again, they're both just as dangerous. Celebrating wins, I tell people, it's like, yeah, give yourself a pat on the back. Definitely reward doing good behavior, but don't do it until you've realized all your profits. Because profits are not real until realized, right? I tell people that all the time. So be careful. Be careful. Anyway, at this point, what do we know? The Feds are not going to do anything today. It's what they're going to say. How do we know what they're going to say? We don't. We don't. We think they might say ABC. They could say CDF. There's really no, what I would say, I would describe as there's no doubt that they'll try to placate to the markets, but then also they have to be careful with inflation. They might try to take the W, celebrate, right? But then boom. Worked for an awesome CEO. We had one good quarter. We'd celebrate one day. Next day, we'd go back to the grind. We didn't have a great quarter. Yep, exactly. That's what you do in trading. You are only as good as your current trade. That's all you're good as. So I don't care if you made 10 great trades in a row. Be on the lookout for a fuck up on the 11th. Trying to eat some breakfast here. It's 9:30 and man, Colorado, it's been 50s the last couple of weeks. And then it was like -20 a couple of weeks ago. It's like, man, it's all over the place. It's kind of fun. I don't mind it. Yep. QQQ. So before I jump into it, do you have any questions, thoughts, concerns? Please don't hesitate to chime in. Here for you guys. If you were not short tech before today, all right, well, you got to wait for a bounce. I mean, this is technically a gap down. Agree with Joe. But could it rally back? I mean, people always get pissed about, I talk about this, like layering into trades at the highs, layering into trades. You don't know how it's going to play out. So if you've been sitting here stalking, right? Let's pick up a AMD. You're stalking. You stop out if you have to. We talk about novice gaps. Here's another gap. You don't know how high it's going to freaking go. You really don't. But if you go all in at the highs, now you have a lot of pressure. But if you go in at, say, 170, 180, say you do like lots of a quarter, what you're going to do. Well, if you need to stop out of a quarter, the pain is way less than going bigger. Now, again, we talk about earnings. You would have had to have hedged. You would need to have likely have hedged just to be careful. But again, I mean, we strongly recommend, like, be careful with earnings. Like, if you, the best short, and again, I love giving credit to my homies. Jay Solstice was like screaming this the other day, and I was like, you're damn right. I got stopped out of some stuff. 2-day range was like, all right, I'm going to wait for this like 118 area. Doink. They've already had earnings, so I don't have to worry about that. We know China's surrounding the island. Why would I not short this and just be careful and be patient? Again, I went to indexes versus actual stocks. And again, I wish I had more, but I'm not going to chase right now. So we'll see what happens. And if I have to ride a smaller position, I ride a smaller position. We know at some point there will be bounces, right? So you don't chase. Because what if, for example, Taiwan Semi drops down to here, 110, and then bounces right back to 115? Well, if I short now at 113, I'm like going to be happy for a minute and then be like, well, I better take my profits 1,000%. But also, too, now I don't have a reference. Like, where's my stop? Do I just put an arbitrary dollar stop in? Well, that's just gambling. What's the risk reward? No. The best shorts at the highs. The best buys are at the lows. When you get repeating formations, and sometimes you're going to be wrong, but then when you're right, it's cake. Trade around your position. You got your entry. It's like Livermore, right? Talk about that book all the time. When you get a position and you nail the entry, best thing to do is sit. Now, I would say, like, he didn't really have the options market. Manage it with options if needed. It's fucking amazing stuff. So, any thoughts, questions, concerns? Talked about FAS. Man, look at this. Put my mental stop at 12. Got to 12:01. How funny is that? People are like, oh, XLF, man, you've been wrong. And I'm like, dude, I mean, you can tell me I'm wrong, but I will short up here every day with a tight stop. I won't even think twice about it. I won't even think. We know things are getting worse. Who holds the bag on all of these problems? The banks. Oh, but Dan, no, look at the freaking risk reward. Up 30. Jesus. I mean, like, do the math. $9 on top of 30. It's almost 30% in less than 3 months. Are things that much better? No, I thought right here was good. All right, we stopped out. Well, the next level's coming. The trend line's coming. Oh, Dan, but you can't short now. Okay, that's fine. I mean, maybe I'm wrong. I end up being wrong, but it's an easy with a stop. Do you want to chase and go long? And again, this is people are like, well, why would you, where's your reference? Like, why wouldn't you just go long sometimes and at highs? How many times have you chased and gotten burned? I mean, someone hit me up about Tesla on the side and was like, I chased the highs. Now what do? I didn't set my stops. Well, again, we can set stops, but again, wouldn't the better buy been the big gap down? You could trade it at least. And does it go higher? I personally don't think it's going higher, but again, I could be wrong. But wouldn't you rather buy down here? I mean, how many people do we know? I mean, here I get trolled this a lot in miners because again, I would consider myself a gold and silver kind of miners guy. Hey, I was chasing this action because I thought gold was going to break out. So I got in on this breakout above 31. Now what? Oops. I mean, this is the thing. You start learning, like, it's not, you're putting yourself in a position to gamble more than play the probabilities in your favor. Does that make sense? That's why I don't chase. That's why I live in, again, let shit come to you. And if you miss moves, you miss moves. There's always another one. Always. But the mentality is the same. It's just everywhere. It just bothers. No, sorry, it doesn't bother me. It's just silly. Just absolutely silly. Just thinking about PayPal, right? Here comes they're going to change the world. They got big news. Oh, oops. Now what? I don't know. Name any stock, right? I mean, been warning people, Apple, leave it alone. Oh, Dan, this is a big cup and handle. I'm like, I don't know, man. I don't know. They got earnings on Thursday, but we talked about like very clearly like what's going on. China is not going to be friendly to Apple. We can guarantee that. Oh, I think it's about to break out. Gives it right back. No, the time to buy would have been at the double bottom if you wanted to go long. But no, you couldn't watch the action and think, well, oh my God, it's going to 200. It's going to 300. Not every stock is the Rocket Pelosi NVIDIA. Makes sense? Sorry, I'm chewing on something. Feel rude. But even then, breaks out. Okay. More it's up, the less you should own. But it's going on a mega run. It's kind of already been on a mega run. But we'll see. Again, earnings coming up. Be careful. Meta. Again, this is where I know we're close when like trolls are like, you're just wrong and stupid and net is going to the moon, blah, 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 blah. Okay. Again, there's traps. We talked about bull and bear traps. You make extremes, right? You go below certain prices to rally back, or you go above to fail. Looks like a gap down. We'll see what happens. I mean, I haven't even gotten into the indexes yet, right? Like it's very clear to me at some point, like you just want to gamble. And if you want to gamble, then guess what? You're going to fucking lose. Yep. I was just watching that. I mean, like Bitcoin. And again, I'm not trying to be on a soapbox. I'm trying to tell you guys, like, be careful. Oh, you got to buy Bitcoin on the ETF release. Oh, it's going to go to 60,000 after that release. Did we not say be careful, buy the rumor, sell the news? Oh, look, it's breaking out of the trend. Bah. Oh, you don't think smart money was buying Bitcoin at whatever 15,000 and whatever above? Look at all the volume down here. Someone really didn't mind buying it in the, 15 to whatever you want to say, 25,000. Now again, who knows if near term what's going to happen? But we talked about 20% pullback, literally 20%. Keep an eye on the 44,000 level. Again, I don't want to sound like a broken record, but if you're making the same stupid mistakes and then rationalizing, because I hear this all the time, like, well, I chased the highs. I'm now a long-term investor. You're a long-term investor? Well, weren't you a trader initially? Weren't you like trying to trade for profits and now you're becoming a forced investor? That kind of thinking is dangerous. Dangerous. So dumb. So dumb. So dumb, so dumb. But you learn by getting burned. Natural gas, good trade down here. We talked about it. Got a really good reference point. Again, I like shorting KLD as that thing bounces. So far, I mean, I was watching like, looks good. I mean, market's pulling back and clearly money is rotating into natural gas. Why? I mean, don't really know. It probably has low downside. That's where people thinking, like we've kind of referenced, right? Low downside. Be careful. Yeah, let's get into bonds real quick. Sorry, I'm like, what do we say? 93 level, probably going to hold, bounce. Okay. I don't have a position in bonds, but I'm watching. I'm like, all right, if bonds start rallying, maybe the market does tank finally. Oh, but it rallied on the, no, well, keep in mind. Deflation would show that a recession's coming. Okay, well, that's where tech should shine, right? But it's like, if you remember in the 2000s, I mean, you had 3.5% GDP in, what was it, fourth quarter 2000? And then those stocks got smashed. Why? Everyone was all in. The growth was priced in. Again, I'm not saying necessarily even the economy has to like fall off a complete cliff for the market to pull back. But the market and the economy aren't one-to-one, right? We know that. Hopefully you know that. Oh my God. So just be careful. I mean, VIX, we said, like, it's a gift down here. Oh, no, I don't want to short. I'm going to sell puts. I mean, I'm reading people's posts. Where is this jabroni? Yeah. Sold puts on the bullish TQQ. What the fuck? I mean, I see this crap all the time. I'm like, you got to be kidding me. Who's the blind leading the blind? Website stuff. Yeah. Please like, subscribe, hit the notification bell. Please get involved. I mean, if you're education, I mean, do you want to rely on others to teach you through them teaching you, forcing it, or are you going to take it upon yourself and just try to get taught, right? It's all free. It's all free. Education. That's the key here. Again, I keep telling you, like, well, why do you help so many people? It's like, well, because again, you guys help me. If I teach you how to fish, now we can catch more fish together. If I teach you and help you and you help others, guess what? It helps fill your cup. It's good for you. Let's get into the indexes. SPY. Got stopped out. We talked about, again, I finally stopped out everything. I was like, all right, I'm just going to wait. And remember, the things that we're doing, I mean, obviously it stopped out of some other things, but this was the last of all of them. This is the financials, last moment. Near term now, gap down, professional gap down, maybe. Volume's not incredible at this point, but just be careful. I mean, this can be, I mean, people don't realize, like, we talk about traps, right? I mean, you see them all the time, right? You have a reference area, right? Oh. Got to go just a little lower. Right? That's what happens sometimes. You have a reference area, goes a little lower to rally back. Oh, you have a reference area, goes a little higher to potentially fail. That's traps, my friend. Not always easy, not always simple. Remember, the goal is to get the most amount of people to do the most amount of stupid things, essentially. That's what happens. Be careful. Be careful. Qs, we've said be careful. I mean, this would be like, well, why would you be shorting the market? Well, look, the Q started lagging. IWM's been dog schnit. Again, markets make new all-time highs, yet IWM is 20% off the highs. Someone's wrong. Someone's the economy and someone else isn't. Again, tech isn't the economy right now. It's just a fun flow thing, right? We talked about that. 8-10 names leading the market. Okay, fair. I mean, maybe more than that, but point being is like the IWM leads, y'all. It's lagging. Now, does it catch up? If it does, then you can have more confidence. Based on my experience, prior history, that's what I pay attention to. Right? Small caps, junior small companies. They're going to paint the picture. Yeah, it's all tech bubble AI hype. Exactly. When does it burst? I don't know. Intel showing signs of bursting. right? Taiwan Semi. We'll see. I mean, again, I don't think they're in a good place. Micron, talked about them having no growth, but all right, let's chase this stock up. Okay, good luck. AMD. Okay, I mean, hey, look, Elon's going to use some of their chips. Okay, I mean, I think correct me if I'm wrong. What's the new updated PE of AMD post earnings? Before it was like 1,280. After earnings, what? Who knows what it is now? Again, I don't even want to look at it. Doesn't matter. Just a little overbought. I mean, if this was the Shark Tank or Dragon or whatever the hell they call it in Europe. Hey, I've got this company selling chips. Mr. Wonderful, would you like to pay 1,200 times future earnings for this company? What's the upside growth? Well, the company's priced at, I don't know, a couple $100 billion, but we're going to make, a couple billion of revenue. Hold on. No, he'd laugh you off the stage. I'm not saying it can't go higher because of momentum, but in general, do you think long term it has to price in potentially this AI again? Because AI is not going anywhere. We talk about it. It's exactly like we were bubbles when they burst. It's not like housing ended, banks ended. It's not like tech went away after 2000. It's not like the internet disappeared. It's not like solar's disappearing. It's not like oil and some people might say oil and gas, but like weed stocks disappeared. Your favorite subsector disappeared. No, it priced in the future growth and then it went south because it had to price in perfection. And then after that, there was no upside in growth of the stock, at least, because again, momentum once lost, hard to get back. Carry, lagging. Nucor, some people are talking about breaking out. Okay, keep an eye on it. Definitely keep an eye on it. Don't know for sure. I mean, again, I like materials. If anything was going to break out that I would actually trust, it would be materials. But again, I've said this and I'm on record. Wait for the VIX to spike over 48 minimum. Who knows where these names will be? I could be wrong. I mean, some names might be higher, obviously, but in general, it's much safer. And obviously, if you want to, sell puts, buy stock, wait for the volatility to come down, cash out your puts, and buy out of the money long dated calls. It's such an easy thing. Airbnb, we talked about flopping from the top of the range. Starbucks, Jay Souls was talking about this too. Look at this reversal. Wow, look at that bar. Right? Again, it's why it's so obvious. Thank you for pointing out because I'm laughing at it because I agree. It's it's the ultimate fuck you trap. We've talked about their numbers were not good. They haven't been good. It's a global growth name. Look at this gap up. Yeah. Goodbye. FedEx. Gotta hold this 240 area. UPS numbers were god awful. Caterpillar has earning next week. I mean, man, this zone. If you want to take the trade before earnings, be careful, but this price area makes sense. Guggenheim. I mean, their earnings. I mean, it's oh god, they're great. It's the reaction. Microsoft. I would say Microsoft's holding up a little better, but look at that wick, y'all. That is again, I don't know how this candle ends up for the day. I don't know how it ends up overall, near term, but if that's not the top, that's pretty, it tends to have these longer wicks. We'll see what happens here. Again, thought it would happen there. Retest wasn't there, but one thing we will have today, we have up here, volume. I guarantee post earnings, we will have volume. Any other thoughts, questions, concerns? I'd rather talk about what you guys think's interesting. Again, if you want to talk about, hey, you screwed up or you're wrong, it's okay, whatever. Let's talk about it. How do you improve from mistakes? Again, I love ag names. We all got to eat. Let this all come down. Some of these are already down. Down, doo-doo brown. Again, UNG, I don't really chart it, but I said, please, if you're going to buy this ETF, because it's pretty shitty, and you want to trade it, try to get as close to 18, 19 as possible so far. So bueno, if you bought the Soxis, Again, last week in the low, low to mid fours. Looking good. Again, SMH, look at this sucker. Or remember, the stock just goes off the SOXS. Hey, Aaron, here you go. Is this a blow off in my opinion? Yeah, looks like it. Volume's high. Straight line moves precede inflection point changes. Straight line down, bottom. Right? Straight line up, chop, then top. Buy the dips on the Qs. I'm not going to say anything. What's your logic? I'm just curious, again, because I don't want to come off as a judging you, but what's the risk reward? Let me ask you questions. So it keeps going up. So do you know much about professional gaps? Do you know that straight line moves precede inflection point changes? Same thing at lows. Zzz, pow, then it's a bottom. Straight line, chop, 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 chop. Straight line, chop, 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 chop. Or down. Do you really think, again, I literally talked about this for probably 20 minutes, why chasing highs, shorting lows is probably the most detrimental thing you can do to yourself, because you are not being thoughtful. You're gambling. You are gambling. You're not being patient. You're not letting the trades come to you. Great time to go long. You got to be confused, right? You're talking about down here, right? Or at the lows is a great time to go long, right? On pullbacks. Let me guess, you're somebody who thinks that you should sell puts up here, right? I'm asking questions. I'm not going to make assumptions. I don't want to come off as disingenuous. But this is very confusing. It's a great time to go long. Maybe you're right, near term or longer term. No one's going to argue that. Markets tend to go higher if they print more money, and once they do QE and they do all the other shit, yes. But the Feds are genuinely worried about what? Tech is the future. Tech has always been the future, bud. Where have you been? Where have you been? I'm going to tell you a little story about bubbles. The future's always priced in before the future arrives. The internet, webs, the development. QQQ went nowhere for 17 years. Okay. No one's saying tech isn't the future. Again, I don't apologize. I don't have the oil fund other than USO right now. Saudi Arabia is running dry. Oil is the future. There's not going to be enough of it. Oops. Tesla selling more cars than ever. Tesla can't lose. Yeah, it priced in the endless future. Go study the past, my friend, because your logic is what gets people stuck, and then they get fucked. Okay, no one's saying those things aren't going away. Peloton. Kapow. Again, not all stocks are going to be Apple or Amazon or Google and be able to put nets around. But at some point, this is the thing. Aaron, do you realize that in the year 2000, GDP was 3.5% in the fourth quarter of the year 2000? Tech was the future. Cybersecurity. We even had electric cars. Remember who killed the electric car? GM killed it? Yeah, so you weren't alive. So you don't know. So I will warn you with genuine, just curiosity. Do you know what bubbles are? Do you realize that at one point, Cisco, the internet was being brought on? The internet. Yes. Look at that. The internet. Did the internet go away? But they had routers and they had all the fun internet. I'm just laughing. All the parts to basically make the internet go Where did it go? Yeah, stocks do, but the indexes do, but not your stocks. That's the problem. You got lied to if you watch CNBC. The indexes, they will throw away turds and they will redistribute assets, but the stocks in them, do you know, Aaron, for a fact, over the last 50 years, there's only one stock left in the Dow. That was that was there when it started, or not started, I guess the earlier it started way on, but just even 50 years ago. Can you name that one stock? Do you think all of those stocks in the Dow are higher? Do you know this? Do you even know? Exactly. It's ExxonMobil. Cisco was once in the Dow. If it is now, I can't remember. Is it? Maybe? Whatever. Crap. Who remembers GE? Right? Oh, that was amazing. General Electric. How about Citigroup? Man, amazing stock. Stocks only go up. No, that's a fucking lie. And I don't mean to be like aggressive to you, but that's a lie. The indexes will redistribute and they will reallocate, but stocks don't always go up unless they get bought out. Well, then that's a buyout. That's different. The company that buys them, does it always go up? I mean, think about how many biotechs that have been bought by good old Pfizer. Do you remember when Pfizer came out with this drug called Viagra? It gave you hard on, long time. They've been in business forever. You telling me this was a good long-term hold? Fuck no. See you, Joe. No. Once it peaked out, you got off of it. Well, then it started a new cycle. But if you rode it all the way from 47 down to $10, you're a fucking idiot. Meaning in general. Like, that would be an idiot move. How about AT&T? Remember cell phones? They're the future. That peaked in 1997. Aaron? Is AT&T still around? Do they still sell phones? No, I mean, you get my point, though. Is tech not pricing in a future? Is tech not pricing in the future? Is AI, again, go look at AMD's price there, and it's trading at probably 13, I don't know, who knows, 1,200? Yeah, you tell me. Again, I will bet you every dollar I have going forward that over the next 3 to 5 years, commodities will outperform tech. And I am confident in that, 1,000%. But you buy tech. Again, there is a tech war coming. Who wins the war? The soldiers or the inputs? What do you need inputs for? That's what you need to be looking at. Yeah, we know AI, we know tech, all this shit. It's pricing in. Now, again, I'm not saying necessarily it's topped yet. I don't know. I'm not going to pretend I know for sure. But if you give me a choice, I'd rather buy the inputs every fucking day for the next 2 to 3 years on pullbacks than I would chasing fucking Nvidia, chasing Apple, chasing Amazon. You basically are chasing the spike. And again, these companies aren't going out of business, but they're just not going to trade at premiums anymore. So if you want to pretend that that's the future, you go right ahead. Because AMD did do this at one point. It went from 53 down to $2. Had another great run, 40 whatever. $1.50. Again, I don't know if it's going back to $1.50. I mean, they could get bought out on a pullback if it's aggressive enough, because I know Intel is just like struggling. Speaking of Intel, tech has been the future, my friend, for years. You want to chase names that are doing this shit? Good luck. I'm not saying you. I'm talking about in general. I apologize. Let me not. Good luck. So let's pull up like an NVIDIA chart and you tell me what looks different about it. Holy shit. Holy shit, man. Sorry, I'm trying to mimic some voice. I didn't get it right. Yeah, you want to chase that? Okay. Okay, Microsoft. Holy shit. Holy shit. Of course it's an uptrend. But is the risk worth the reward? You're not asking yourself the right question. You're asking the wrong questions. You're asking, how do I make more money versus how do I not get my ass kicked holding long term? Now, again, if you want to trade it, go right ahead. That's a whole other conversation. But tech's the future, Dan. CNBC said it was. No shit. And CNBC, again, if CNBC made people rich, it would be a private channel. Trust me, if they actually had content that would make people's money, not fill the waves, airwaves, it would be private. Someone would be charging thousands of dollars for this information. No, CNBC is like the news. You're getting recycled old shit. They have nothing better to talk about. There's no inside information on CNBC. You're just getting the news. Buy the rumor, sell the news, sell the rumor, buy the news, whatever. If you want to stay long tech, you go right ahead. But I will buy all day in time on pullbacks. Ag names. I know what they can do. You have to eat. When money leaves overpriced tech, they run right back into commodities and inputs because it's a secular. It's very secular. Inputs, outputs, inputs, outputs, inputs, outputs. That's how the market rotates back and forth every time. But they don't talk about that. There's cycles, right? You want to buy lithium? You want to buy copper? You want to buy names that make sense long term? Now you're talking my language. Freeport McMoran. When this went crazy and all that money left tech, look at this motherfucker. It went from $3 up to 63. So look at that, $3 to 63. And now let's go look back at the Cisco's. That Cisco stock, that was the future. That was your NVIDIA. It went from a whopping 82 down to $8. Bet you didn't know that. You're 19. It's all good. How would you know? Letter X. In the year 2001, at the bottom, or a peak in tech, letter X was trading at 18. At one point, it got to fucking $200. Let's go back and look at Cisco. Oh, that's right. It went back to $8. Get my point here? Back in 2000, aluminum, 34, nice rise to 100. Oh, but what about those other companies like Intel? That one's been around forever. They did great. Hey, how about that Microsoft? You know, everyone's been using Microsoft Word. They've been using Excel, Microsoft. Oh, God. It went nowhere for 17 fucking years. And you telling me you want to chase this action in tech? I don't usually get like aggressive, but I'm trying to be very like direct with you. I'm not going to bullshit you. If you want to ride tech out, you go right ahead. But you're being convinced to buy and hold something that's overvalued, that's pricing in the future. It's priced in. It's not going to go up forever. So if you want to run the risk reward of losing bigger than winning, again, maybe you could catch a double in some of these tech names if you're lucky. But what if they pull back 50, 60, 70%? While other names in the market, because money isn't destroyed. It rotates. It fucking rotates. It doesn't get destroyed. Someone's winning, someone's losing. Well, someone's bag holding the fuck out of tech at some point, and bag holding it. And once they take away their support, again, I don't know when. But I would question anybody chasing anything in the Magnificent Seven. I would question anyone's long-term thesis about holding on to tech like it's a guaranteed fucking W, because then you don't even realize in the past. The winners change. The larger you get, the more likely you are to lose. The law of large numbers. If you have great margins, people will duplicate, replicate, and try to knock you off endlessly. Do you think NVIDIA will have some sort of superior advantage forever? Supposedly Intel did. Everyone thought that. Cisco would. Not everything is lucky as Apple. But maybe NVIDIA is Apple. But guess what? The rest of the sector got slaughtered. We've seen at times. Do you guys remember all the other cool tech names? Palm Pilot. I mean, again, you can talk about all these different like little tech things. Fail. Fail, fail. Fiber optics, fail. Certain web security, great. Some of them failed. I mean, the point being, again, it's all risk reward. You want to buy the Qs up here? I mean, you've got to be higher than a fucking kite. I mean, literally. I mean, this thing just went from 257 up to 430. And you want to buy the 1% pullback? Disappear. Wait for it. Like, there's at least 10% pullbacks every year in the market. And then if there's a recession, minimum, it's going to be a 30% pullback. Which, again, go look at the manufacturing data. Look at all the data. It's slowing down quickly. Now, again, can they throw liquidity at it? That's the biggest wild card here. And then if that's the case, I will show you something that most people will not show you. Because the Nikkei, Japan did this. Same kind of shit. Where's it? Nikkei. Trying to remember what the best. Can I get the monthly on this? How far back did it go? Oh, no. What's the ticker symbol for the Nikkei? I usually don't pull this up. What is that, Nikkei? You have the monthly? No, you probably don't know. Damn it. All right, give me 2 seconds. I'm not going to back off of this because you don't know, and this is a good opportunity. Stocks always go up, they say. In the 1980s, they went full QE. Full QE. That's why the yen is like 100 and whatever thousand it is to dollar. It took, still hasn't even made new all-time highs. 37,000, 38,000, you're at 33. Again, I'm not saying that the U.S. market is probably going to do that. But point being is that if they do full QE, it will be an amazing monster run-up, and it will be death. It will be the absolute death because you can't get any better than liquidity, endless liquidity, right? Here, just look at what it looked like. I mean, it's just pure death. 38,000 to 10, 15,000 forever. Now, again, I'm not saying go out there and short the market for the long term, but I'm saying if you're going to go long right now, I need to check your brain real quick. Not in the mean way, but just let's talk. Like, sit in the therapist chair because that's gambling. Where's the one with all my save charts? All right, we'll go back to it later. That's gambling. And if CNBC tells you to do something, do you do it? Does the news tell you to do something, you do it? No. Again, this is why I post in the Discord room. These notes. Check this out. If you haven't read these, you'll love these. Yeah, everyone's bullish at the highs and they're going to be bearish at the lows. Aaron, I've been trading for 20 plus years. At the extremes, everyone's the most bullish, and at the lowest, everyone's bearish. This is how the market really works. Number 4 is my favorite. Here you go, number 6. Higher prices get people to chase higher prices. Hey, Howard, appreciate the friendly compliment, man. Appreciate it a lot. You got to be careful, man. You got to be careful. And people say, oh, I missed out on a move. Well, again, you can trade around a position. Right? Oh, it can only go higher. Okay. But again, this is why in trading, the more you're up, the less you own. And again, I hope my Bitcoin friends are listening, because I told them, dumbasses, oh, it's going to the moonshot. Oh, after the ETF announcement, it's going to 60,000. I'm like, I would start taking profits. Wait for the pullback. You got a 20% pullback, exactly what we talked about. Then you could have started buying the dips. But anybody bullish Bitcoin, I'm sorry. Get your head checked too. Why? Oh, come on. Update. Come on, give it to me. Like, get your head checked. I'm sorry. You believe something. Until it makes new highs, it's not bullish. It's just not. And not saying it can't be. But you better be careful holding on. Because again, as much as people love to sell security and 1,000%, but what if Bitcoin gets outlawed? What if it gets, again, there's way better technologies. Again, there's a million things out there. And again, I'm not saying go short it, but I'd be trading around my position, because until it gets over 68,000, it's still considered down. You need higher highs to have an uptrend. We don't have higher highs. You could have lower highs. Again, I mean, people get frustrated. It's like, this is just the obvious truth. Now, again, let's talk about the Qs again. Do you have to short it up here? No. But if I had profits, they are not real until realized. What is your upside? It goes from 341 up to 430 in 3 months. I mean, is it crazy to think that there might be a 10% pullback at worst at some point? Even if it comes from a higher price, that would be the better time to buy if you really had to go long. Buy it on the one down day? Shit, man. Again, I'm not mad or frustrated by any means. I'm like, this is like the kind of thinking that gets people fucked up. Because they'll buy the dip and then they'll go watch CNBC and go, well, it's going higher, it's going higher, it's going higher. Everyone says it's going higher. And then it goes lower, goes lower, goes lower. And then they sell at the lows and then it goes higher. And they never can think critically, independently of without being told. Do I have to be, again, I will short early. Sometimes I will buy early and I use stops. I define my risk, but I wait for dips. I wait for extremes. It's okay, because I'd rather have a small loss than to buy up here and go, well, I hope it works out, and then just have a dollar stop here. Because I'm like, what's my upside? Ask yourself the question, where is it going? Well, if it's an uptrend, it's always going high. Okay, if that's how you want to see it, that's odd. I mean, you can do that. If that's what you think. But again, that to me is gambling. Why not work less, wait for bigger moves, then act upon them? Because if you want to try to guess every single day, daily activity, good luck. Oh, but it's an uptrend. No one would disagree with that. But if you understand the rubber band man theory, it's getting stretched. Every leg up is getting more tired. And at some point, there's going to be a bigger pullback. Because everybody's all in. Who's left to buy dips? Nobody. So then again, dips get bought on the prices as they go lower. No one can buy up here. Again, people have to get stopped out. They have to get sold out. That's how that works. Any questions? Because again, I'm passionate about this stuff. It really bothers me and irks me that people just don't realize, like, you can do better than 99% of your financial advisors if you had the mentality that the more you're up, the less you own. You trade around your positions. And you don't sit here and go, all right, well, everything has to go up or down forever. Well, down's never been a great bet forever. But damn well, if you get stuck in a multi-decade trap or a multi-year trap and you own the same stocks that were the past and are not the future, you're fucked. And that's where indexes are different than stocks. Sitting in Apple, 20 Apple 180 puts at my 30 cent for Friday. They'll have to pry them from my dead hands. Man, if I was you, I mean, when the IB spikes and the VIX spikes, again, I don't think it's going to break 180 before earnings. I would roll the profits into more time if you really want to, like, play that game. Again, I don't recommend out-of-the-money puts because they're lottery tickets. Lottery tickets end up with zeros most times than not. And not saying that it can't fail on earnings, but going from 197 down to 185, maybe 183, who the fuck knows what it is before tomorrow? You not think some shorts are going to cover? You don't think there's going to be a little bit of a squeeze play potentially? So I would be taking my puts before the earnings. I'd be cashing them out, taking the double or triple, whatever you went from 30 cents to 90 cents, whatever dollar, who knows what it's at, because of the premium, the IV. Remember, implied volatility before earnings is going to explode, or it is exploding. It's absolutely exploding. So if the implied volatility is increasing, your options are getting more expensive. Why not take the profit on them and roll them out? Or wait. The second mouse always gets the fucking cheese. First mouse gets the trap more than likely. Because you don't know. You just don't know. If you want to pretend that you do know, again, what magic crystal ball do you have that's always right? That's what I'll argue. And it's like, no, why don't you, again, play the probabilities. If the stock drops from 197 down to 180 before earnings, unless the market's absolutely just fucking imploding, which again, the odds of that before the jobs number, before, until earnings gets over, well, again, it could be topping. It doesn't mean it has to blow up. But again, why would you give yourself such a short amount of time to hit the fucking home run? That's a stupid play. Yeah, you sell too early and leave too much on the table every time. Well, again, if you came to the table correctly, you wouldn't be leaving money on the table. You'd be trading around a position. I would never buy deep out of the money puts or deep out of the money calls and expect them to hit. Yeah, they can double and triple very quickly, but why not play the safer trade? If you would have bought at the highs, the freaking 195 puts going out into March, now you could hedge with calls and you could hold them. Okay. But again, you got no fucking delta, Howard. You bought puts that have no delta. Zero. You have the 170 puts? Even more, again, that's great. You might get a 100% return or multi 100% return. But you have to fucking lock that in. Or you could risk losing it all. Because if the earnings don't come out bad, who knows? You said 170, 190, 180 puts. What about 190 puts? You got to give me more information because I can only assume that you said you have the 180 puts expiring Friday. I mean, if I was you, I'd probably, well, that's great. You bought them at 30%, but your gains are not real until realized. So I don't give a shit what price you pay for them. They don't matter. And also, too, you have time decay. They're out of the money. They have no fucking delta. So again, lottery tickets. That's what they are. If you expect to get rich on lottery tickets, well, guess what? Good luck, man. Trade around them every once in a while. I mean, again, I talk about buying lottery tickets for something and going, I expect to lose them all. I don't care. I know it's a calculated risk. My downside is 30 cents. But I promise you, without a doubt, if I had 20 puts going into fucking earnings that I paid 30 cents and now they're at $1.50, I'm taking most of them off and saying, well, that was lucky as fuck. And I'm going to take that profit and I'll buy puts or calls later. There's another fucking trade. I don't need to sit in and just roll the dice through earnings with big gains. You say 170, 175 like you know the fucking future, Howard. I can't say for sure I know anything. I don't. But I do know this. I can tell you this all fucking day that Apple will always try to paint the picture rosy after their earnings. So how it reacts on a down move, good luck. You are gambling with assumptions. Trade what you got, man. You don't have 170 or 175. You don't know that. You don't know that. I got to call you out on. You don't know that. What if it goes nowhere on earnings? What if it gets stuck at the 180, 200-day moving average? It's not all good. You're gambling. You don't get that. And again, if you're going to say that stuff, I'm going to call it like it is because I used to do that shit. It's cool to gamble. Yeah, on small amounts, baby amounts. If you turn 600 into $2,000 or whatever you said it is, what's the difference between when you have more money and you do the same shit and you turn $6,000 and you could have turned it into 20, but you gamble the same fucking way and you lose it? So you're not respecting the money. You're not respecting the processes. Because if you tell me it's going to 170, 175 after earnings, like it's a certainty, what in your brain made you think that you know more than the market? Because it's down from 195 to 180, whatever. There's no guarantee. There is no guarantee. You're lying to yourself. You have a blinder on. That's not how you trade. It's probabilities. It's not certainties. You don't bet on certainties. The probabilities of 170, 175 at this point depend on what? More than likely China, not their fucking earnings, bud. If China takes over Taiwan, Apple products get thrown in the fucking trash, no more being bought. Their earnings, it doesn't matter. Probabilities below. Where did you get that? Where did you pull probability of is below 170? How? How do you know the reaction to the earnings? See, you're lying to yourself, and I'm going to call you out on it because no one knows. No one fucking knows. And I'm not trying to be harsh, but you're lying to yourself, bud. Yeah, I've been doing this a long time too, and I would never tell myself I know for sure what the fuck is going to happen with earnings. If you've been trading a long time, then you know that. You absolutely know that. You know that earnings is a complete gamble. Okay, again, you cannot trust your gut. That's bullshit too. That's you lying to yourself and giving you a reason to believe that this is something that happened. Well, my gut said this, and my gut said that. Well, go back and study your gut. How many times is it right? Well, maybe your gut is being controlled by perceptions and beliefs. Well, when I buy puts, I want a stock to go down. Now my gut says it's going down because I want it to go down. I mean, am I the only one here who's laughing at this? Like you're lying to yourself when you talk through certainties. Again, I'm not saying you have to like dump the whole trade by any means, but pretending that it's going to go 1,000% below 170 and you should hold all 20 puts. Okay. I mean, that's the kind of thinking that will fuck you up. Because there's no certainties. You're believing certainties. Your brain loves certainty. Well, guess what? It's a probability-based game. So you're fucking incongruent with your beliefs. Again, I'm not saying you're right or wrong, but I mean, if I told you it's going below 170 after its earnings, you would look at me and say, you're a fucking idiot. I don't know the reaction to earnings. What if they announce a big buyback? What if they announce this? I mean, they're going to paint the picture. What if the stock just doesn't go anywhere? What if it's stuck here at 180? And then after earnings, the market's already pulled back 2 or 3% this week, and the market just goes flat on a Friday on a jobs number. You're giving yourself no time. You're not giving yourself a week or 2 weeks or 3 weeks. You're giving yourself 2 days. That's called gambling. You can hear the dice rolling in my hand. That to me, again, doesn't make sense. Like if you think it's going to 170, why wouldn't you not give yourself time? I mean, it's already probably short-term oversold, going from 196 down to 184. First dip gets bought. You don't know. Again, It's going to get whacked. I would agree with you, but how the fuck do you know it's going to happen Thursday? Are you lying to yourself thinking that you actually know for sure? Because again, I'm not saying it can or won't, but how do you believe in certainty? That's just the stupidest shit I've heard all day. Because if you gave yourself time, I'd say absolutely you'll get there. But by Friday, what? How do you know that? It's just my feel. Again, if we traded off of feel, we'd all be rich. But guess what? How many people would make more mistakes trading on feelings than anything else in the fucking market? Oh, I feel like Bitcoin's going to the moon. All right, let's just buy and hold it. Bang, pulls back to 15,000. Oh, I feel that the market has to crash last week. No. I don't trade feelings. You can't trade feelings. You have to trade the evidence. You have to trade the repeating patterns. You have to trade the probabilities. Okay, but just because you made one right prediction doesn't mean you're going to make the next prediction right, Howard. You can be right 10 times in a row, but the next trade is independent of the probabilities of the past. So what the fuck does that have to do with because you were right on your last call? That doesn't matter. You assume the same set of circumstances no matter what, and it's probability based. And I would tell you every single time, the more you win, the more your feelings, your gut beliefs. No, you don't like that I'm being honest with you. Everybody will agree with me 1,000% that's ever been here and been with, you are lying to yourself. You are allowing your ego to inflate because you've been right. And you don't realize that at some point, you being right has nothing to do with the market, Howard. Nothing. Zero. The market's going to do what it's going to do. Absolutely. And so if your ego inflates because you're winning, then you think you're going to continue to win. And you probably are trying to win, and your gut's telling you you're going to win. But guess what? Every circumstance is independent. So again, I'm telling you from the point of someone who doesn't have a position, how do you tell me it's going to 170, 175? How? You're telling me your gut. How do I trade off of your gut? How do I know your gut is always right? How do you know your gut is always right? Because if your gut was always right, I'm pretty sure you should probably be worth, who knows? You make up the number. And so I'm just trying to be the mirror, my friend. This kind of stuff is exactly how I got into trouble, how every single person gets ruined in trading. Howard, but what if the expectation is it goes over 200 and pros think it's going below 170? What if it goes nowhere on earnings and those puts you have go to zero because it goes nowhere? It doesn't have to go up or down. Remember, there's 3 directions: up, down, and sideways. Exactly. And so if I have profits after a decent move down into earnings, I'm not going to ride all 20 puts. I would take profits and then wait and see what happens, because the second mouse guaranteed to get the fucking cheddar. Oh, but what if it gaps down? Well, guess what? Then you can wait for it to pop, or you can play it accordingly to location. Again, you're making assumptions from ego. You have to take your ego out of trading. Because at some point, it's going to burn you. The desire, the feel, the belief, the want to be right will put you in a position to make mistakes. That's how the market always wins. 95% of traders fail and blow up. Go check the statistics. Oh, I'm trading on gut. I believe my gut. My gut, when it comes to trading, basically follows what I want to believe. My gut, over time, 50-50. I don't trust my gut. I trust the evidence and repeating patterns and my rules. Well, what are your rules? If I have a put up huge into earnings, how many times have I rode it through and it lost? How many times have I rode it through and won? Well, I go back and I look at it and I steady go, why wouldn't I just take the profits before I'm guaranteed the win, and then I can trade accordingly? Versus roll the dice, lose big, win big, lose big, win big. Isn't guaranteed money guaranteed money? Because if it's at 170, 175 on a gap down on earnings, it might bounce. Then you can trade that. But what if it goes nowhere on earnings? Your puts go to zero. And if it pops on earnings, your puts go to zero. So 2 out of 3 of these circumstances lead to pain in your out of the money puts. That's a problem. You're not looking at it through probabilities. You're just looking at, oh, I believe it's going to 170. 66.6% of the outcomes lead to a total loss, and those puts that you had for 30 cents are now whatever they're worth. Okay, well, if it's 66%, in my mind, take 2/3 off. Take 70% off. Don't turn a win into a fucking total loss, potentially. Because if it doesn't go below 180 on your earnings thoughts, I hope you're absolutely right. Please, if you go back and reward this later, I hope you're absolutely right. I don't care. I'm trying to look out for you, trying to talk to you from the logical perspective of probabilities, risk reward, risk management, discipline, rules. If I trade on my gut only, that has no basis. That's my feelings. What if my feelings change? I can't base things on feelings. Because your feelings are going to lie to you based on how you feel about today. What your mom said, what your kids said, what your wife says. You're lying to yourself when you don't run it through the probability mindset. 2 out of 3 results could kill those puts. Because you have no fucking time. So it's absolutes. You make money, yeah, you make great money if it goes to 170. If it goes to 180, zero. If it goes pops on earnings, zero. Why would you not take some profits? Well, you don't get rich unless you take risk. You can take calculated risk. If you made a bunch of money up front, why would you press it? Do you think the biggest, smartest money in the world is always pressing their bets after they win big? Ask yourself that. No. They take what the market gives them. They don't believe in certainty. They don't assume. Because assumptions and their gut feelings, again, I can only imagine that at some point, I mean, we've been nailing this stock. If you've been paying attention, we called it the double top. We said, be careful, it might not make a new high. Do you not think that there's people who've made assumptions that were right before, and since they were right before, they're going to think they're going to be right again? That is the biggest fallacy to trading in the fucking history of trading. Just because you were right before does not mean you're going to be right again. Well, I bought Bitcoin. Everything's going to be like Bitcoin. I bought Nvidia. Well, every stock will act like Nvidia one day. I'm short Apple. It has to fucking tank by Friday. Do you guys get this? Am I talking to myself? Am I the only one on the whole planet Earth in the ether of the internet who gets this? How many times have you been right 10 times in a row, but the 11th trade is what fucked you? Excuse my language. Ask yourself these questions, y'all. If I told you anything for certain, again, you can leverage options. I talk about this, but give yourself time. Don't believe in straight line moves. When they happen, be thankful. But give yourself time. You don't go from the top to the bottom in days. It takes weeks and months. If I had Apple short, do I think it's going back down to 124? This isn't some fucking bullshit crap company. People will always jump on this on dips, and then they get stuck, and then it could go lower. Do we get this? Just need one yes to prove that I'm not losing my mind, because I'm just like sitting here like, man, are people not sensing this? Do they not realize this? Have they not? If you haven't learned this, again, use the Coulling link. Let me explain to you how this works. If you're not sure, here, this is the guy. You want to talk about the guy? Of course it makes sense to you, Eric. Like, you understand it. This is the fucking guy. And I'm back. Randy How? Trading psychology. Again, there's a million ways to skin a cat, but there's the same ways we all fail. And here you go. Trading is about probability, not winning or losing. Yet needing to win to prove the self-controls of the mind that the traders bring to trading. Remember, trying to control what you cannot control will traumatize you the way your brain responds to uncertainty. Randy, or Howard. Sorry, why do I keep calling you Randy? My bad. Howard, you are putting yourself in a mental pickle for the long term when you play this certainty game. Again, be confident in your trades. But to believe in certainty is a fallacy. It is a joke. It is an absolute recipe for fucking disaster because you can be right 5 times and you can turn a fucking small pile of cash into 20, 30, 40, 50, whatever, $500,000. But you believe you have the golden touch and you can't be wrong and you buy something and it goes against you and you go, you know what? I believe it's going to this. And guess what? One time, all it takes is one time for the market to say, oh, your beliefs? Fuck your beliefs. Wrong. And you won't know why until it's too late. How many people do we know? Tesla. I've been saying this for years, since 2021. It's like, this is the top. Okay, you can trade around it, but it's going higher. I'm just holding on for the long run. Talked about it failing at the trend lines, all this stuff. Again, prove me wrong, show me an uptrend. Prove me right, continue to trend down. And again, maybe it's just dead money. But how many people could have bought 100 different stocks in the last 2 years, but guess what? They're sitting on Tesla and they're going, it's going higher. It's going higher. Look at the move from October 2023 to to the highs. Think of all the other stocks that are making new highs. Think of all the stocks that are making new highs. But I believe Tesla's going to 1,000. And again, all it takes is one wrong belief. Now your brain's traumatized by it. Now it doesn't even trust its own beliefs. Again, this is not for Howard. This is for everybody. Like, you don't realize you're your own worst enemy because your brain wants certainty. And so when anybody tells me they know what's going to happen before something happens, I say, that's your hope. That's not certainty. And if you're right and it happens 1 out of 5 times or 1 out of 2 times, you start believing in certainty. But the reality is the probabilities do not align with your beliefs. Go back and check it, because unless your bank account says millions, billions, or whatever you're trading and like hundreds of thousands of times over return, then it probably wasn't true. All right, I'm going to end it on that. Great chat, man. Hopefully, again, people always think in their mind that I'm being harsh. I mean, I'm just trying to talk to you like I would talk to myself. Because I've had to catch myself in these moments. I've had to catch myself. Okay, got to stop out. I think financials are going to crash at this level. Nope, sorry, it didn't. I think this might be a good buy down here. Nope, it wasn't. Every time you make a mistake, every time you feel pain, learn from it. Do not duplicate it. Do not lie to yourself. Do not pretend that your gut, your feelings, your thoughts, your beliefs, your hopes and dreams are evidence. They're just clouds of your judgment. Do what the market's going to do. Define your risk. Have rules. Have stops. Have discipline. That's what you need. And then when you win, you let your winners run. You trade around your position. When you're lost, you're gone. When you lose, you're gone. Oh, but Dan, trading is much more than that. Does it have to be? Does it have to be? All right. Love you guys. Appreciate all the love, support, generous donations, feedback, all that stuff. Likes, comments. If you thought this was helpful, leave a comment. If you listened this far, I appreciate you. Please use the Coulling link if you want to chat. Would love to talk sometime. Again, trading is hard. But are we making it harder because it's hard, or are we like lying to ourselves? And we're making it extremely hard because we're relying on expectations versus evidence. And if the evidence changes, do we pivot or do we stay wrong? And if we stay wrong, how much are you willing to lose? You have to ask yourself these questions. All right. Talk to you guys and gals later on. FOMC day. Don't forget. Jeez, so many topics.